What is good, guys? Welcome back to another video. In today's video we are going to be discussing how to identify institutional candles. I'm going to simplify this for you in the easiest way possible, no fluff, and going to get through it as quick as possible. Before we get into this video, make sure that you head down into the description. First link, click it. That's the free Discord server. As well as that, make sure to head onto the app or Google Store to download our app for free and check it out. Check out our signal reports, etc. So let's get into the video. Okay, institutional candles. The first thing that you want to do to identify institutional candles is, first of all, understand where you are in market structure. Okay. Now, we're not going to focus too much on market structure, but understand that in order for the institutional candle to be successful, there are certain things that you have to look for. Okay, look out for. There's a checklist. If you're already part of the premium group, there is a checklist. So make sure to check out the checklist in the server guide. That will go over all of the confirmations that you can look for to make sure that your institutional candle is high probable. Here, if you don't have it though, I'm going to go over some of the confirmations that you can look out for. Okay, so in basic terms. Okay, so one of the first things that you want to look out for is make sure that you are in a bullish market structure if you're looking for buys. So bullish institutional candles, vice versa, bearish if you're looking for sell setups, bearish institutional candles. Okay, so in this scenario right here, okay, I can see that on the 4-hour time frame, I'm bullish. Okay, I'm bullish on the 4-hour time frame. On the 1-hour time frame, after making this move up, this move down up until here. Okay, this is the seller, this is the buyer zone. I can afford to sell. Yes, on the higher time frame, I am bullish, but remember, we always look at a trading range relative to the other. This pullback, yes, I can sell it. It won't be long term. It will just be down until I reach these discounted areas, then I look to buy. So what does this mean? If I'm trying to make things really, really simple, and if you're a beginner, only look for buy setups. Your buy setups are going to probably come from here, okay? They're going to come from here, okay? Down at the discounted areas. This is where you're looking to buy. Right down at the bottom at that buyer zone. Now, if I'm trying to play both sides, what I can do is I can look to sell to buy here. So I can sell along the way here, look to buy here. So let's take, now once we have that understanding, let's take a look at a few institutional candles that we potentially could have. So right here, we had a break of structure. Okay, this is the first thing that you want to see occur before looking at an institutional candle. If you don't see a break of structure happening after your institutional candle forms. So you have your institutional candle. Boom. The candle forms. You have the bearish engulfing candle. And you don't see, and then you have this. And then this is your low. If you don't see a break of structure occur, okay, right after your institutional candle gets created, then I'm not looking to sell. Okay. So in this scenario right here, we have a 2-hour institutional candle. It's very clear right there. Let's mark out the whole body, including the wick. So the fact that we got a break of structure, okay, below this low, just like so, this is a confirmation of break of structure for me. This is the most important one. Now for scenario number 1 setup, it's a bit different. Right now, we're just going to simply discuss scenario number 2. Okay, we're not going to discuss scenario number 1 at all now. Scenario number 1s are extremely, extremely powerful. I'm going to show you guys one example of scenario number 1 in a second, but for now we're going to discuss scenario number 2, okay? Just the simpler ones. So in the scenario number 2, you're looking for a break of structure. First of all, that is one confirmation. You want to see a bearish engulfing candle or a bullish engulfing candle. It's not 100% necessary, but it's a huge, huge confirmation. And to be honest with you, if I don't actually see a bearish or a bullish engulfing candle coming after my institutional candle, then I usually don't look to take the trade. Okay, that is like one of my highest probable, one of the things that I'm looking for basically. Okay, so you need a bullish or bearish engulfing candle to occur. So in this scenario right here, I would want a bearish engulfing candle to occur. Okay, my third confirmation, which is probably my most important confirmation, I need to see an FU candle created. What is an FU candle? An FU candle is simply a candle that clears liquidity. So right here, this clears liquidity. Basically, this wick, you see this large wick that we have right here? This is what you want to see occur whenever you get an institutional candle. Now, the FU candle sometimes can be this candle right here, or it can be the institutional candle. So it can be either one. Okay, it doesn't really matter. what we're really looking for, to simplify it, is a large wick. You see this large wick right here? This has cleared liquidity over multiple different highs. Even see this double top that we had right here? Okay. There was retailers. Okay. There was people selling this, hedge funds, whatever it is. There was people selling this double top. Okay. They sold it and then probably maybe stop loss break even, maybe a wick up above here, whatever. Before we make that big move down, we come up, we slap them out of their position, hit the stop losses, hit the break evens, and then the market goes and it just drops and it breaks structure. It broke structure. So now what are we looking for? We're looking for a retracement back to mitigate this institutional candle, because this is the area where the institutions opened their buy positions. Okay, this is where they opened their buy positions to smack these people out. Now they have to come back, close their positions that they were in drawdown during this whole period. They have to mitigate those positions, get out, and then get into this trade. Okay, the proper trade in the real direction. They just had to smack people out of these positions because they wouldn't be able to get filled in if they were just trying to sell straight away. They need to get people out of their positions in order for them to be able to get filled in at their desired levels. Okay, so that's the basic understanding right here. Now, a nice confirmation that we have right here for this institutional candle is there's a lot of imbalance. So when you have a lot of imbalance, it means that there's more, like basically the more confirmations that we have stacked at this level, the more likely this area is going to get filled in, like come up, attract the price action to here, and then move straight away. Okay, now with this institutional candle, it would have missed you by literally a pip, but I'm showing you this because this was a really nice move. Okay, but you guys get the idea. What are we trying to look for? We're trying to look for an entry off of the open. Okay, stop loss above the close. Some people go for the wick. For me, I'm a bit more aggressive. I'm tighter with my stops, and then take profit is the low. And this would have been a pretty sweet setup if it came up, triggered you. Most of the time, you're going to get triggered. It's actually very rare that you don't get triggered. But it doesn't matter. If you missed this move right here, look how I could have gotten in another move. See the way I missed this move, guys. Okay. Usually, once you have an initial institutional candle, once it gets mitigated, you would get a secondary one. This is where I actually got a really nice trade. Okay. Beautiful sell setup that I was able to catch right here. I even sent in this one to the team. Okay. So right there, this is a scenario number one. So in this instant, you don't actually get a break of structure. You're waiting for a break structure on lower time frame. This is a bit more complicated. I go over this more in the scenario one, scenario number two lesson in the course. Okay, so just watch it there because I'm not going to go through it. It's a bit more complicated there. So yeah, what are we looking for? We look for that retracement up to the institutional candle, wick in, and a beautiful drop. You have the exact same thing. You have a bearish engulfing candle. You have the large wick that ends up clearing the liquidity. See the liquidity right here? Would be this. Okay, see these highs. Liquidity might not look so clear to you on the higher time frames, but break it down, go down to the lower time frame, and yes, the lower the time frame the liquidity is on, yes, the more insignificant it becomes, but it's still there. There's still people trading at 1 minute to 5 minute highs. Okay, so it's still there, but of course that higher time frame liquidity is definitely going to be much more prevalent, you know, like more significant. So that's how you find the institutional candles. Okay, let's recap. Remember, now these institutional candles, they stick out like an eyesore. You see them from a mile away. Okay, big wick and then an instant drop to the other side, big up move and then a big down move. Okay, so you usually see a big up move like this and a big down move with a large wick. This is something that you see all the time. Same here, move down, big up, and then a wick. This is what you're all seeing, and you're waiting for that mitigation, come back, touch that institutional candle, and then up. Same here, mitigation, come back to the open, and then down. Why are we looking for the open? Because the open is probably where the open and 50%, these are the two entries, because this is where the most volume is at, where the more orders will probably sit in. This is where they opened their order to buy. Okay, so this would make sense why we would look to get in right here, because this is where they'll close. Once they close their trade, they're obviously going to get in on the other side. Okay, so yeah, that is pretty much it, guys. I did it in under 10 minutes. So yeah, once again, recap. You're looking for the break of structure. You're looking to enter off the open of the institutional candle. You're looking for a bearish or a bullish engulfing candle. Okay, and you're looking to enter off a scenario number one or a scenario number two setup. Okay, this was a beautiful trade all in all because it was fast. Whatever's fast doesn't last. price came down, filled in, smashed our take profit right here, filled in our imbalances, etc. So that was a beautiful trade all in all. So hopefully you guys gained some value from this. Hopefully you guys understand now, simplified the institutional candles as much as possible for you guys. And yeah, if you guys are interested in checking out more of our content, make sure to head on to my other videos. As well as that, guys, really new exciting announcement coming out for you guys. Going to be launching a new YouTube channel. This one's going to be more to do with order flow and psychology, risk management, etc. So Debraj and Kieran are going to be more involved. If you don't know who they are, guys, those are two other mentors on the team, absolutely brilliant traders sharing their knowledge with you guys. So yeah, very excited to launch this very soon. With that being said, guys, make sure to like, drop a sub, and we'll catch you guys on the next video. Have a great day.